Taking a look at the interest rate market today, I want to focus on the 10-year note. 10-year note up on the day. We saw a move here today rolling into the Fed announcement tomorrow, and when you look at the 10-year right around the 123.22 level, we saw a high of 123.23, so just off the high, a low of 123.10, so well off the low. So we did see some strength in the 10-year note today, and really when you look at the overall driving factor here, or the range I should say, of the 10-year the last week or so, we've seen it in a fairly tight range, and I think it's possibly because we're leading into this Fed announcement tomorrow. So the bond market here and the note market is kind of biding its time, waiting to see what the Fed has to say, if there's going to be any change to the present policy expectations. So when you look at the 10-year, really we saw a low of 123.17 and a high of 123.24. That's really for the last week. So again, between that range here, we currently are in the middle of that range, but still a pretty tight range leading into this Fed announcement tomorrow. Also want to point out the trend in the market. We are seeing a short-term uptrend, and now with that uptrend, we're seeing rates gravitate back towards the 250 level. So we settled today right around 251. But from a short-term perspective, we're at least seeing a bottoming pattern here, and we are seeing rates come under some pressure, and we're seeing the 10-year bubble up here a little bit off the lows, now seeing a short-term trend higher. And that leads me to the Fed. Tomorrow we have the Fed announcement. That's going to be the focus for the market, I believe. We did have some numbers today that influenced the market a little bit, but really it's going to come it's going to be incumbent upon the Fed, to maintain their policy, I think, tomorrow. If there's any shift in the dynamics there, if the Fed indicates that they're going to maybe move a little sooner relative to later, then I think that could be a dynamic that the market's going to have to contend with. And when you look at the CME Fed Rate Watch tool here, I think it's very interesting. That really is a 36% chance right now that rates are going to stay the same in December. So the expectations are for at least one cut, if not two. So you got a better than 60% chance right now for at least one cut, if not two cuts by the end of the year by the Fed, and that certainly could influence the 10-year note moving forward.